Good morning, good evening, good whatever time it is you're watching this. I'm Dave with Cups and Handles, and in this quick market recap, we're going to break down today's SPY price action, identify the key technical levels that matter, and discuss what I'm anticipating for the next trading session. We only have a few minutes, so let's jump right into the charts. Hello everybody, welcome to today's video. Now, I'm going to start it off as always doing a recap of today's session, and then I'll go over my expectations for what I believe is going to happen tomorrow. Now, with all the lines, let's kind of just jump right into it. So we had TSM's earnings come in late last night, early this morning, whatever time it was for you. On the West Coast, it comes in at 11 p.m. my time, and the market did not react very well to it. The earnings themselves were actually very, very good, but I do think that the increase in the capex spending scared off a lot of investors, which caused a sell-off. And we talked about this in yesterday's video where either we were going to see TSM elevate the market or we were going to see them pull the market down. And unfortunately, in today's session, they did pull the market down. Now, when we started the day off, we had the call wall at the 755 and we had the put wall at the 752, which is also where the max pain was located. And that gave us the earlier conviction to take calls below the put wall. Now, just to preface this, I did not trade a lot today. I had a couple trades later in the day, but earlier in the morning I did not feel good. I currently have the flu again. But we had a put up at the top, rode that down, took calls at the bottom, rode that up towards the call wall. Now we started to see this cup build here, and what happened is that the handle rejected. Okay, so the handle rejected right there. And this is why I always say short the top of cups, even if the day looks bullish or anything else, short the top of cups because usually it will pay off. Okay. From that, it broke down below the put wall. It did stay at that level for a little bit, but once it broke down, we saw the call wall actually move all the way down to the 750. Okay, and also that's a local support range. So the thesis was for me that we were going to pull slightly below that call wall range, and I ended up taking calls right in that area and rode those towards the high of the close. And with that close, that put us below the put wall. So that means that a large quantity of puts were exercised. They did try to shake out some of those puts towards the end of the day, which they did a good job of, but they didn't reach all the way above that put wall. It was a little difficult though, because the call wall was actually underneath the put wall this time, and that creates this kind of predicament where you usually want to be underneath the call wall, but above the put wall. Well, in this situation, we're going to be underneath that put wall, but we still want to be underneath that call wall for the majority. And that's what the market tried to do. They tried to sell down even further, get more put premium, while being able to start selling some calls. And then they pulled it down underneath that wall towards the end of the day. And then right as the market closed, they pulled it back up right towards that 751 with the market closing at the 750.72. So we did close below the put wall, above the call wall. Not the most ideal, but it did start creating some very quality structure, and that's kind of what we're going to get into next. And the structure we're going to look at is on the 30-minute time frame first. I want to go ahead and pull the put wall and the call wall out of the way right now just so that I can use those for tomorrow. But with that, we started to close a really large inverse cup. Okay, and this is targeting this support at the 748.66. We did pull under that slightly. Now, we did talk about this in yesterday's video, but there's these two supports that are very close together. So I'm going to kind of bundle them up in one range for the moment. but I actually thought we might pull down all the way to that 747 range uh, due to that. We pulled down to the 747.88, but that still means that we closed this inverse cup at the 740, excuse me, my Weeble's lagging, 748.66, and from that, kind of like at the top of a cup, we always short. At the bottom of an inverse cup, we always take calls because we expect a handle upward. So currently, we are within this bearish structure. Now, as bearish as that structure is, we still have bullish structure here, and it has not been invalidated just yet. Okay, we still have the bullish cup here, and that does not get invalidated until we push down towards the 746.23. Now, today was a very important day because we tested multiple very crucial moving averages. Trading is a skill that can last for a lifetime. Join my Patreon for live classes, my personal market analysis, premium Discord access, and direct communication with me. Invest in yourself, become a more consistent trader, and build a better future for yourself and your family. Visit patreon.com/wooksy to join today. Thank you so much, and let's return back to the video. And those moving averages were the 5-day moving average and the 10-day moving average. Those levels are at the 752.30 for the 5-day and the 750.24 for the 10-day. And the upper bounds and lower bounds for both those levels were the 754.30, and with the high of the day, we pulled basically right up to the top of that range because the high of the day was 754.57 compared to the 754.30, and the low of that level was the 750.30. Okay, so once we broke through the 5-day moving average, we went to test the 10-day moving average. That level was at the 750.24, with the upper bounds of that level being the 752.24 and the lower bounds being at the 748.24. The market had a low of the 747.88, so it basically tested almost exactly towards the bottom of that 10-day moving average. So overall, that's not exactly bullish or bearish, but it is checking both of those levels very, very precisely. And then we ended up closing above the 10-day moving average, but below the 5-day moving average, which means that there's going to be a little bit of consolidation between the 5-day and the 10-day come tomorrow's open. Okay. Now, what my expectations are from this point, and let me go ahead and hide the moving averages. Let me hide the drawings for a moment. Is that if we're going to see continued selling, then we will very likely see this inverse cup work to build a handle tomorrow. Okay. And from that handle, we already have part of that handle being built. We would very likely pull down towards that 747.44, retest that level. If we don't bounce upward from there, then we are absolutely going to be heading to the 746.23. Now, if we do start heading to the upside and we do start rejecting this inverse cup, then we still have a lot of work to do. We have to break above the 754.52, and then from that level, if we do break above it, say we just head upward the entire day instead of this handle pulling to the downside, it ends up trying to head upward. We need to build additional structure because then we'll be building a cup there, and from that cup we would expect a smaller handle to the upside, and that handle needs to push us back up to the 756.23. So kind of in between two levels, but there's a good case to buy to the upside now that we have tested the 5-day moving average and the 10-day moving average. That's a lot of liquidity to start heading upward with. However, once again, if we are going to continue selling, then what's the next level? It's that 20-day moving average. The upper bounds of that level will be the 746.81, the lower bounds being the 742.81, and the 20-day moving average itself being at that 744.81. So we do have the large potential of starting to pull down towards that level if we see another selling day tomorrow. But again, if we don't see that selling, then we have a lot of liquidity to start pushing right back up to the upside. So seeing the overnight price action will be very important. It'll be important to see if we pull back down towards this 747.88 to close that small inverse cup, because then that would be the inverse cup building the handle. That handle can push us downward right away, or it can basically create a nested inverse cup, meaning a cup within a cup, and work on building a handle to the downside before starting to try to break through some of these support ranges. So I was very bullish moving into today, yesterday, but with the TSM earnings, it made it a lot harder to be bullish on the day. I ended up doing well on some calls and some puts today, but I fully kind of expected the TSM sell-off to be bought upward. That did not happen. We saw TSM start buying upward and then basically start rejecting for the majority of the day, having a little pop towards the end of the session, and now starting to pull down again in the after hours. So the pre-market will be very important to see kind of what structure is going on, but we are basically between those two structures. Okay, we do have, again, this larger cup formed. This could be the handle on that cup, which is very, very drastically pulled down. Um, or this can create a continuation of this inverse cup and break us out of that bullish cup, which obviously that would not be the best thing for the market. Because if we do break that level, then we will be pushing down to the 744. We do have some very key support ranges in here that we do need to target, just in case we do start heading down, which would be basically at that 750 or 745.36 and then the 743.57. So we'll talk about it more in tomorrow's stream, but with that, I'm going to go ahead and end the video. I wanted this one to be pretty quick today. Basically, we're going to see continuation of the larger cup and handle, or we're going to see that being broke down, seeing this inverse cup closing further support ranges, and seeing continuation from that. So with that said, I hope everyone has a fantastic rest of their day, and I look forward to trading with you all tomorrow. Thanks so much for watching, and take care, everybody. That wraps up this market recap. If you found the analysis helpful, please take a moment to like the video, leave a comment, subscribe to the channel, and share it with someone who would benefit from these daily market breakdowns. It really does help support the channel and allows me to continue creating free educational content for everybody. As always, have a trading plan before you enter a position, manage your risk, and remember, we're not trying to predict the market, we're trying to prepare for it. Thank you all for watching, and I'll see you in the next one.